Hey everybody. Well, I'm recording this in the dark early morning of Saturday on a very, very rainy Bay Area morning. And kind of fits my mood now because the past 5 trading days have actually done more damage to my account than any other period in all of 2022. That is to say, with all the counter trend rallies and all the rough spots we had, the past 5 days were the worst. And it's puzzling to me because I actually have not been that aggressively positioned and I haven't done anything completely crazy or stupid. But for some reason, the sheer strength of the market, I suppose principally because of 2 Fridays ago, has done great damage. And it's been rattling. Particularly on the heels of such a good 2022. And I know I'm not alone there, which is why I shared that post about commiseration buffet, because I feel a little better when I know I'm not the only one who's having a bad time, and I thought I could provide the same service to a few others here on Slope who are in the same boat. Usually I plunge into these kind of little index reviews without even looking at them, just kind of get my quick take on them. I'm not going to do that this time. I've actually gone through them in advance to kind of get a gestalt feeling, what was the zeitgeist of the market out there in advance of this. And so this is just my standard dozen set of indexes, and I feel a little better having gone through these. And let me just share some thoughts about them. So just in alphabetical order by symbol. Let's just thumb through them. We start off with the NASDAQ composite. And the key element of this has been and continues to be this supporting trend line, anchored back to the March 9, 2009 bottom. And not surprisingly, and in retrospect it's always easy to see, we have found tremendous support at this Fibonacci. It first happened here, which was actually the peak of my portfolio value, interestingly enough. This was when it was, and you can see why too. This was just a steady slide lower, like so. So just a classic. I mean, I'm not much of an Elliott wave guy, but I think kind of your classic, 1, 2, 3, 4, 5 kind of move. Just slammed it right on down. But we found support here and here and here and here for a long time here, for a couple of weeks plus. But it's been very strong support, and then that was coupled with this right here, which is also extraordinarily strong support. And so no surprise at all that we've just gone roaring higher. I would say though, and my impression from all these indexes is that there's nothing here that screams new bull market. I thought a couple of days ago when I saw the sharing of the declaration of the old fella who was saying this is a new bull market, just preposterous, because this to me has every look of an enfeebled, extremely old market, which is just undoing some of the damage yet again, and is in no position based a strong foundation for a new bull market. Now, should, God forbid, it have the strength to cut through this trend line, that's terrifying, but we're a long way from that. It has traversed this portion, which has been relatively easy, but, and that's why, I got to tell you, I'm just thinking out loud here, that's why I'm sort of flabbergasted that how much damage this has caused, because this little fella here, I mean, it's nothing compared to, say, this, This June 16 to August 16 thing, this was tremendously damaging, but weirdly, this has been worse. I'm a little baffled, I gotta tell you. Here's the Indu. Now from this great distance, you can see how extraordinarily rich the value on this still is. The notion that, just take a breath. Look at this chart. Does this look like a new bull market to you? Does this look like an opportunity to buy to you? There's nothing distorted about this chart. This isn't like a ratio chart or like I'm not transforming it in some way. This is just a raw price data. And look at this damn thing. We're literally only yeah, see, one of my dogs is saying how ridiculous that is. This is only about 7% below the highest point in human history. You know, it's 93% of its peak value. It has respected this line here as support. That's quite clear. We had been down channeling in this, and we burst above it, fell, and it successfully respected this as its new support and started taking off. So I'll say again, if we push past this level here, if we push past the high we saw on December 13, well, we got problems in here, and we got trouble right here in River City. That would be, Mr. Permabear right here will tell you, that would be a troubling sign that, wow, who knows why, but this thing has legs. So that's something to watch, and it's not that far away either. Here's the NDX. No reason to dwell on this too much because it's very similar to the CompQ, and it has its own, you know, one good thing I'll say about this market is it's very chart friendly. You know, these Fibonacci's are working out great. I mean, look at that. It's like, you know, God's own Fibonacci levels right in front of you, but very much the same setup. Here's the S&P 100. From this great distance, you can see that the notion that this top will succumb as these did is not out of the question. There's nothing broken about this top yet. It has not broken this trend line. It has not gotten above this this price level here, which in all honesty I think would be more appropriate down here. Let's anchor that to the most recent lower high. I think that's a more fitting place for this. So like that. Here's the Russell 2000, which is a bit of a mess. This is not as clean a read as the other. It found its own support a while ago. It actually bottomed way back here on October 13, of course, that very crucial day. So don't have much to say about that. SOX, the semiconductor index, still looks lofty and still looks toppy. Not the cleanest pattern in the universe, but it's not bad. We're still below this vitally important horizontal line right there. Here's the S&P 500. We're going all the way back 123 years. And here again, we see this trend line has not been violated. This is terribly important to watch. If it pushes above this and pushes above this, I mean, the white flag goes up at that point. I mean, I'll be mystified as to where that kind of strength could be coming from. But, you know, I'm supposed to be a chartist and I need to be honest about these things. And that kind of violation would be gruesome for the bearish argument. Transports, still respecting their trend line. In fact, you know, mashed right up against it beautifully. You can see right here, just right there. So Tuesday, interesting day for that. Will it reverse? Just about the only thing which is very clean in the Dow world is the utilities. Here was the lifetime high, lower high, lower high. And so we've got this same kind of double top phenomena that we saw back here. So this is kind of an intriguing one. Now the VIX is quite interesting because I think at one point we got down to a 17 handle on this. This has been battered to the same kind of levels that we saw during these kind of yellow zones here, which were times of like ceaseless rises in the market. If you look closer, we got lower Friday than we've been since for a whole year. You have to go all the way back to the really when the market was making its highest point in human history in early January 2022 to match the VIX we saw on Friday. That's how battered and beaten. And maybe that goes a long way to explain why the damage has been so bad, because you know volatility premiums are being crushed to zero. This is incredible that volatility has been cut almost in half in a very short amount of time. Because back here, late September, it was around 35. And down here we got down to a 17 handle. So that's, by my math, that's half. Yeah, that's incredible. XMI, not that interesting. Major market index. We'll just move on. And here's the XOI, which is the oil index. This one this one's a little troubling to me because this just keeps finding strength. I'll leave this here for now, but this pattern's clearly been violated, and we have yet to break this trend line. So, I still have energy shorts. The other index, and I'll close with this one, which still gives me some hope that it's going to work out, is the Tadawul Index, Saudi Arabia, which my view is that this pattern here is analogous to what we're seeing here. So, hope springs eternal in the bearish breast. Anyway, I will wrap it up with those words and just say again, rotten 5 trading days, but heavy in cash, just because it's been so rotten, about 33% cash, and look toward the next week with tremendous interest, because as you can see, we are definitely reaching some make or break levels with some key items there. So I hope you're doing all right. Hope you're doing better than me. And thanks for your continued help with Slope Talk. And earnings season's about to get hot and heavy, so things should be really rocking the next few weeks. Thanks.